In an interview, Ray Dalio talked about the 3 places where he says you should diversify your cash. What he says is rising inflation and low interest rates are creating risks for our investors, but cash is not the answer because what he says is, quote, "know that cash is trash. Don't keep it in cash. The most important thing that an individual investor can do is know how to diversify well." Ray Dalio goes on to say that you should be diversifying your money across 3 different areas. First is in different countries, second is in different currencies, and third is across different asset classes. He says that if you diversify your money this way, it will outperform cash. Let me start by talking about diversifying across different countries because this is something that just recently I started to talk a little bit more about it. So the United States is the largest empire, the largest economy, the largest military presence, the largest country, the most powerful country in the world, which is great. But one of the downfalls with being so big is when you're so large, it's harder for you to grow very quickly. You could think of it like comparing a small growth startup company with a blue chip massive established company. When you're a small startup, you can be more nimble and you can work to grow faster and you can innovate and you can acquire more market share. So you have a lot more upside when you're small. Obviously you have more risk, but when you're large, all you're really trying to do when you're a big massive company is just grow steadily, continue to make sure you're getting your sales, continue to slowly drive revenue. I mean, you're just so big. You're a massive machine where you can't move as fast as you could when you're small and nimble. And so that's the issue with the United States. The United States economy is massive. We are the largest economy, the most powerful economy in the world, and so we just don't have the ability to grow as fast as we used to when we were a lot smaller. Back in our parents' and grandparents' time, it wasn't uncommon to see the United States economy grow by 5, 6, 7, 8, 9% a year. And so if you were investing your money into the United States economy, you were seeing a lot of growth because the economy was naturally growing as well. So you could see a lot of upside just because the economy had so much room to grow. Now, obviously our economy is still growing, it's still very powerful, but it just doesn't have the ability to grow as fast. And so if you were trying to see upside, well then you might want to consider investing your money into something a little bit smaller, like an emerging market, a smaller country where the economy is growing because these countries are trying to grow a lot quicker, they can be more nimble, they can acquire more market share, versus the United States economy is more kind of like your blue chip. It's just slower, steadier growth, but if you want to see more potential upside, then you might have to consider moving some of your cash into some of these companies overseas or in these emerging markets. That way you can see more of that potential upside, especially now if you're trying to see higher growth. The second way that Ray Dalio talks about investing your money is by investing your money across different currencies. So the United States dollar is one currency, and then you have the Japanese yen, then you have the rupee. There's a bunch of different currencies. Many different countries have their own currencies, and the whole idea behind this is if you are worried about inflation, which is what we've been seeing happen for a long time now, and inflation continues to get worse, well then that means that the value of the dollar will go down. So if you own some different currencies, you convert your dollars into different currencies, well then that could be a protection against your dollar, because if the dollar starts to go down, then the value relative to these other currencies would go up. Now I'm going to be honest, I am nowhere near an expert in currency trading or currency investing, but the thing that I want to talk about is he also mentioned cryptocurrencies. Going back to the article on the street, Ray Dalio says that if Bitcoin achieves widespread acceptance, then regulators will come in to control it. And he said, quote, "At the end of the day, if it's really successful, they will kill it because they have ways of killing it." Then he goes on to say that given Bitcoin's lack of intrinsic worth, it's hard to know what the cryptocurrency's ultimate fate will be because there are so many things in a historical perspective that didn't have intrinsic value and had perceived value. They went hot and then became cold. Bitcoin could be one of them. So what he's saying is that the ultimate fate of Bitcoin is yet to be determined. Ray Dalio does own Bitcoin. He's talked about this in other interviews. He says that he does own Bitcoin. It's not a huge piece of his portfolio. It's a very small piece of his portfolio, but that is kind of like a protectionary hedge, kind of like gold. And to him, it's also a way to protect against inflation. But what he's saying is that we still don't know what's going to happen with cryptocurrency like Bitcoin. And there's a chance, according to him, that it could flop. And then the third way that Ray Dalio says that you should be investing your money is within the United States itself. is across different asset classes. So this would be things like stocks and real estate and businesses. So asset classes, businesses meaning not publicly traded companies. So what he's saying is not only diversify across companies in different countries, diversify across currencies, but then diversify within the United States with different asset classes. This does not mean that within your stock portfolio you have a blue chip fund and then a startup fund and then a healthcare fund. That is not diversification across different asset classes because it's all within paper assets, stocks. So what he's saying is different asset classes, meaning things like stocks and real estate. Going to the CNBC article I mentioned in the beginning, Ray Dalio says, quote, "Cash is not a safe investment. It's not a safe place because it will be taxed by inflation." It's an interesting way to word it, that you're taxed by inflation, but it's not wrong because when the United States government wants to spend money on their operations, they can raise their money by taxing people, so they raise their taxes, but they're never able to tax people enough, even if they raise taxes on the rich, to cover all of their spending. So what do? Well, then they print the rest of their money. So if they can't raise it by taxing, then they print it. When they print the money, this causes more inflation, and more inflation hurts the average person, the person who's not financially educated, the person who doesn't understand what's going on, because now your rent is more expensive, your groceries are more expensive, your life is more expensive. So you're taxed through inflation because now if you just save all of your cash, this money spending causes more inflation, which hurts the average person. The concern a lot of people have is, why should I put my money in the market right now when we're close to market highs? We are at such high points in the market. Why should I put my money in and then risk a potential market crash coming in, and then I could lose a big chunk of my portfolio? And Ray Dalio addressed that. In that same article, he went on to say that you can reduce your risk without reducing your returns. He says you will not market time this. Even if you were a great market timer, the things that are happening can change the world, so it changes what could be priced into the markets. So what he's saying is you cannot perfectly time the market. Nobody knows when a market crash is going to happen. No one knows if it's going to happen tomorrow, next year, or in 5 years or 10 years. There's no way to time that. But what he's saying is we have a lot of other things happening in the world, like inflation, which is a big concern. And if you don't do something with your money, well, then this inflation can eat away at your money, and it could affect the markets, because what that means is if inflation started to get really bad, the value of the dollar goes down, and you start to see, even if it's a minor dollar crisis, well, in turn, that makes the price of assets like stocks and real estate go up, which means that now it's more expensive for you to go out and use your dollars to buy stocks and real estate because of all this inflation. So it's kind of like a reverse crash where the value of your dollar crashed, which in turn makes it more expensive for you to go out and buy stocks and real estate. So even if your stocks and real estate aren't more valuable because, it's just that the value of the dollar went down, it'll be much harder for you to go out and buy stocks and real estate with your dollars just because the value of your dollar dropped. Ray Dalio says that the excess money supply in the system could create certain economic and political problems. He went on to say, quote, "You cannot raise living standards by raising the amount of money and credit in the system, because that's just more money chasing the same amount of goods, and it will affect financial markets the same way we've seen, and it will affect the inflation rate. It won't raise living standards in an important way. As inflation then begins to bite, it has political consequences." The easiest way for me to explain that would probably just be by diagramming it out. So let's assume that you have 5 people in this world. 1, 2, 3, 4, 5. And in this world with only 5 people, each of these 5 people only have $100 because that's just the way the world works. And in this world, they all want to be able to purchase this car. You only have one type of car in this world, and this car costs $50. Well, let's assume that suddenly each person in this world went from having $100 to $1,000. Now, all of a sudden, each one of these people are going to feel richer. And let's also assume that the way that they grew this number of dollars that they had, I can't say wealth because you'll see why in just a second, is the government here said, you know what? We are going to print this money out of thin air, and we're just going to make you all richer. So the government gives each person $900. So the government gives each person $900, each go from having $100 to $1,000, and everyone says, holy cow, I am rich. I just 10x'd how much money and wealth I have. Well, what's gonna happen? Do you think this car is still gonna be on sale for just $50? No, because there's so many more dollars in circulation. The value of each individual dollar went down. Nothing was produced to actually create more wealth. The only thing that was created was more money out of thin air. The average person pays the price for inflation, which is why it's called a hidden tax, because it is a way for the government to raise taxes without actually legislating anything. Because if the government wants to raise taxes on people, they have to get it approved. But if they just print the money, well, then it's not as hard, and people say, oh yeah, great, we're spending more money. But who pays the price for this money spending? The average person. Because now your groceries and your cars and your vacations and your rent become more expensive because the dollars that you use to go and buy these things no longer stretch as far. The last thing that Ray Dalio said is, quote, what we're seeing happen has played out many times in history. It's like watching the movie over again. So when it comes to investing your money in different asset classes, what Ray Dalio is saying is, yes, we could potentially see a crash, but he says the bigger risk is what could happen with inflation, which is why you don't want to try to time the market, and you want to continue to invest your money smartly across different asset classes. That way you can put your cash to work, because your cash in this environment is a liability. If you enjoyed the shorter clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to invest your money in real estate, our team put together an amazing guide on real estate investing. This guide goes over what real estate investing is, how to start using real estate to generate cash flow, and how to build wealth with real estate. This guide is completely free when you sign up for our daily newsletter. So if you want to read our guide on how to start investing your money in real estate, you can download that guide just by clicking that button right over there. Thank you for watching, and as always, keep hustling.